Hello guys, glad to have you on board again. Today we'll start with the Bitcoin and cryptocurrencies in general right away, and I have to tell you something right now. I just bought some more Ethereums. I'm maximum on what I wanted to spend in there. I still had 3,500 euros already set it in. I just put it an additional 1,000 and a half in there, and that's all I wanted to spend. So I just got this. I'm going to review that. We're going to start with it just to set things straight. Sorry, this is just meant for the French review. So I just bought, as we've tested that level, this is a level I wanted to buy. So we're right in here. So I just bought 2,000 for yes, approximately there. So this is the price I've been buying. This is kind of a buy and hold, so I don't really care about the price. I just put it in. It's just that I bought, and I'm going to put that into my hardware ledger wallet and not having a look at this for a long time. This is why I've been putting the black box I just deleted. So just to be clear, I've been buying that level because this is what I wanted. I don't necessarily have clean signals that this is already over, but let's be straight in here. This is kind of the volume is I was waiting for, so I bought for that reason. The volume has been triggering as I was expecting it, and we're right on the support, so I just follow the plan I've been telling you, because once again, I'm not the kind of guy who just says something and don't follow it, and unless I have clear information suggesting I might not do it, I don't have anything like that. I mean, right now, yes, we're in bearish breakout, but we're right on support area. I can find some volume, and I pretty much expect the market to rebound in here. So we'll see if I'm right or wrong. Could very well go slightly lower to find the $220 approximately. I wouldn't be surprised, but just to set things straight, $260 or $220 is nothing close to a big difference regarding the overall scenario, which is, and I remind it to you, making a long-term investment at good price and good and decent prices to forecast the end of that bearish impulse, returning to the mean, which is probably right here, returning to $400 and approximately, and price is slightly higher, so probably gonna return to the mean in there, in which I'll be ready to confirm the scenario, and whenever we'll get there, I expect into the long run to eventually get to search the market top when going slightly higher and probably searching that 127 to 138% extension, in which I'll be taking some gains if I'm right, but this is something that we won't be talking about until a few years. I don't expect this to happen before 2020 or eventually even 2021, not to say eventually later on. So this is absolutely long term. So now that I've been buying, it's no longer time to talk about this. So just to be clear, Ethereum scenario to me, over. I've been putting my money out there. I don't give a shit anymore. So it really is like normal looking at this. I'll still follow the plans if some things had to be done, but really to be really straightforward in here, what I've been doing, putting that black box for the French users, is basically what I think right now. It's the fact that as long as we remain, let's say, above 100, I don't see that much of a reason to be scared. And as long as we remain below 500, let's say in here, okay, as long as we remain below this price, is nothing I get to concern. So it really is a black box kind of scenario in here, and as long as we remain in there, I don't give a damn. So it's in the ledger wallet. I'll be putting an alert in here. So I'm just gonna delete this one and put another one slightly lower. I'm just gonna not put, as long as we remain in there, I don't give a shit. Okay, so we're just gonna wait to see when the price will eventually either go to 100, and that will be a concern to me, or we'll just get to break above 4,000 and a half, $450 approximately. And if we manage to go there, then I think we might be able to validate the fact that the bottom has been found. But very well go slightly lower. I really don't care. All I care is that this is a price I've been highlighting, and I think it's highly probable to be the bottom. So I've been buying, and now Ethereum scenario is out, so I'm gonna uncheck that. It's no longer something I'm gonna watch out for. The scenario is done. Ledger wallet will be filled by the end of the day, and I will just wait for this to terminate. Now regarding the Bitcoin, the scenario is slightly different. As you can see, Bitcoin is pretty far from the prices I want to buy and hold on this one, so I just don't do anything. As I said, I just decided to split those two, and instead of thinking them as a whole, like everyone is probably doing right now, and might be about to ask themselves the questions, why the hell is Bitcoin still above 6,000? Why isn't breaking the supports as expected? It should do it or it shouldn't. Some people have some reasons it shouldn't do. Some people have reasons it should do. Oh man, fuck it, just wait and see. Either the Bitcoin will survive and might eventually be bought at 6,000, but it's not going to be the case in just a few days. So just be damn patient, and it's not because Bitcoin will go down that Ethereum will, obviously. It's just a matter of you must think of those independently. I've been clear about that for quite some time right now, and it's still valid to me. You don't think Bitcoin and Ethereum together, you really think them separate. The Bitcoin might have its own destiny, the Ethereum as well. I think Ethereum has been reaching out to interesting prices. This is the reason I've been buying this one and not the others. Now Bitcoin hasn't been reaching out to prices I'm interested in, so I'm just waiting to see how it goes. If it never goes there, and if it's been, let's say, if we get to the desert crossing phase and not moving from the 6,000, then okay, I might eventually consider buying the 6,000s in the long run, but probably not until a few months. Probably waiting for 3 to 4 months, spending in that area. If we spend 4 months in there, narrowing the volatility, narrowing the volumes, then I might be considering that we've been through the desert crossing part, and that we just simply didn't make the flushing part. We might eventually do a tiny flushing part later on, but anyway, I'll be ready and confident enough to buy if, for example, we're still there in November. If in November we're still above 6,000, not having and still haven't made that bearish outburst and flushing pattern, then I might be thinking that we might have made the desert crossing, and to me, desert crossing is something I'm ready to buy. It wouldn't necessarily mean that this will be the market top, and we could very well have a burst in the end later on, but that will give me confidence enough to push the buy button again, which for now I don't see into Bitcoin. I have confidence enough in the Ethereums, and this is why I've been doing it. I don't have it in the Bitcoin. So I hope this is clear to you guys. It might sound a little bit odd. Some people won't be agreeing with this, but once again, if I was trading accordingly to what you think, really would be a problem. So I'm trading what I think, and what I think is that those two must be treated differently and separately. This is what I'm doing. I just got into Ethereums. I don't yet go into Bitcoins just for now. So basically waiting. Those who think that because Bitcoin is in here means that it's the strongest and things like that, I think that you are thinking wrong. I mean, literally the correlation thing is over for quite some time, and now if you're thinking correlated, you're just thinking wrong. I think it might just be about to drop on the Bitcoin and not dropping in the Ethereums or things like that. It's just really think them independently. If one is triggering buying entry for you, just do it. If the other isn't, just don't buy it. This is the way I do it. Once again, you don't follow me blindly in there. Otherwise, you and I will have big troubles. If you are thinking that you don't have confidence enough in your trading, and as Phil has been buying, you should do it because Phil is a professional and things like that. If you do that, don't come cry to me if for some reasons the thing goes to zero and we just bought bullshit. If that's what's about to come, and if you lost your entire capital, just set things straight. I've been putting very tiny amount of capital in there, and the money I've been putting in there is mostly the money I've been taking out of that damn market. So I've been taking the losses of people who've been buying stupid prices, and I'm buying with those losses. Okay, so I'm buying with the selling entries I've been making all the way through this. So if this ends up being bullshitting sector with the cryptocurrencies, and if that thing is just about to die, then I'm not going to lose anything, okay? My future as a trader is not going to be damn killed because of this, and pretty much far from it. It's just going to be a tiny loss that I don't really care about, but I needed to set things really straight. If you go in there and put all your money, if you got to lose it, don't come cry to me. I'm not responsible for anything in there, and if you're copying me, just do it as it is your own decisions, okay? If you're lacking confidence and putting that lack of confidence into me, then do it, but be responsible, all right? And don't come cry, because the way I do it and the way you'll do it will be totally different. So if you want to copy me, you can copy me, but do it the same way. And once again, I don't really recommend that. I'm here to teach you guys how to get into trading by your own decisions, not to just blindly following someone else. All right? Now moving on. So aside from the cryptocurrency sector, we've got interesting things ongoing. I might be about to be stopped out on the GPN. It really is worrying, because I wasn't expecting this to happen. I mean, we've been making lower highs and lower lows, so I really was expecting to make a lower low in there, but apparently it's not the case. And if the market is breaking that high, then I might get out of this. So I've got an invalidation level set there, and I'm just basically patiently waiting in there to see how it goes. The yen has been trying to make a rebound as we just try to flush out the Turkish lira problem, but doesn't necessarily mean that this is the end. And even if it is, does it really necessarily mean the yen to pull out? I don't really think that way. I think the problems are really piling one upon each other, one upon another. And the thing is that we might just have terminated one problem and heading into another one, as the dollar is about to reverse, and I think the Wall Street guys won't like that. The gold probably is about to push up, and we're going to talk about this one as well. I think euro dollar is triggering a scenario as well. GBP/USD might be triggering another one as well. I've been reversing the USD MXN, and we're going to talk about this one. I'm still bearish on USD CNH. So I think I'm heading into fucking up the dollar, and I think that is going to be the next problem. So we just made the Turkish lira out. But I don't think that the problem is already over. We've been piling them dangerously, and we're going to have to deal with them one by one. And the next one seems to be the dollar to me, regarding the currency war. So in terms of currency wars, I think right now is about time to see how the dollar will handle some nasty downward reversals. It's not necessarily right now that we're going to get to the big sales of dollars, but we could have some kind of retracement, and I'm really interested to see how it will plot in the next following days. So we're going to start with the most interesting things in here. Is that, first of all, Chinese are still trying to rebound, but they are not at the current time. So we might be heading to some more downside in the Chinese indexes. I still forecast the price to go slightly lower in there, so still some bearish potential with the Chinese, even though I think those don't have that big of a bearish downside. They mostly already treated that, as Wall Street hasn't at all. So if problems are down the road, I think USD CNH is gonna damn fall, as if the Chinese just have an additional 5% downward move to make, where for example, the Nasdaq could make a minus 12 to 13%. I mean, Nasdaq could very well just go there once again. That's a minimum. So that will cause a two times the drop the Chinese will make, which means some way this has to be reflected somewhere else. And I think USD CNH is obviously going to be the game changer in here. So probably expecting a 5% drop into this asset, just to compensate for the loss, the extended loss that the US could make, that the Chinese won't. All right. So that's about it. Regarding the dollar, we're going to take care of the DXI. So don't care about those big candles. They're just fake candles because of TVC quoting. So you can see there's nothing that you can see in there. But in the 2-hour chart time frame, I can clearly see that we've got two options. Option number one, we just make a tiny higher high and just trying to break lower support. Second option, this is just fake. We go down and we fuck everyone else who hasn't gone out already. So this is how it goes to me. We make trend channel, all right, to the lows, damn it, all right, and to the highs. So we still have some potential to go slightly higher, but not necessarily really into that mood. And I strongly suggest that we might already be a little bit too far. To me, this seems not like a trend, but like a range. And when I see ranges, I generally expect two waves, which means A, B, C might be already terminated, and I really would like to see that wave, those waves terminated and going to the downside. So you can clearly see we're making two wave motives at the current time: A, B, C, A, B, C, A, B, C, A, B, C, A, B, C. So we're really moving into two subwave counts, which generally suggests we're not trending, we're ranging, and when we're ranging after a trend, generally means that we might be heading to some bearishness. So this is first option. Second option is this is the range, and in that case we might have another bullish move, as once again, whenever you trade, there's always a risk, and there's always a possibility in which you'll be wrong-footed. So if this is what's about to come, then the dollar will be strong, but the dollar will be making its last strong move. So it's just the way I've been thinking. It's like all the dominoes are in place. It's either we fall in here and we'll have extended time to get into the big short. Option number two, we keep on doing it on a straight line by a stupid way, and if we do this, we're just gonna fuck up everything afterwards, which means we will have made an ABC correction just like that. Okay, we're gonna have made a B wave, a B structure dynamic, and then we will be about to make a C wave, and if that's what's about to come, the fucking C point will be nearer than expected, which means earlier than the end of that year, and whenever we'll get there will be the big short, which means in here shorting the damn US indexes for a long time, for 2 years, and probably shorting the dollar as well for that same 2-year period. Once again, I remind you this: the dollar isn't bullish, it's just bearish, but it's just a matter of fact. I'm trying to find out how we're going to do that consolidation. Option number one, we make a B point in here, we made a C point there, but we're going to have extended amount of time to reach out that area. Option number two, we just do it the stupid way, as I've been saying, and we just go to the C point in a few months, in just a few weeks approximately. It will lead us towards probably, in terms of seasonality, October is generally a bad month for the equities. We've got 19th of October in 1987, the actual day I've been damn born. So I've been born the day of the worst ever day in the Dow Jones history. So we might be about to do another one. I mean, if October was about to trigger a crash, I wouldn't necessarily be surprised, and I would pretty damn like it to have a birthday present of seeing the U.S. equities just falling again on the 19th of October. So that works to me. Okay, if that's the way Wall Street want to do it and want to play it, then play that shit. I mean, collapse the gold, keep on fucking the GBP/USD. You can do it that way. If you do it, you're just gonna cut the time you will need to see things coming, which means if we go there, I'm just gonna fuck up the dollar, fuck up everything, and go to the big short trade. It's just two different ways to go to the same action. In the end, to me, the dollar is bearish, which means the equities will be as well, and this is just a matter of time. This is just how we're going to do it. I'm no magician. I don't know what the market will choose, but it clearly has two options. The fast option, we go there pretty fast and we're going to go lower even faster afterwards. Second option, we save us some time and an additional probability to have the end of that year on a positive return, and probably going to head into troubles for next year, and probably Q1 2019 will be problematic, and Q2 probably going to be a crashing one. But that's how it goes. As I said, I don't see the market having more than 6 to 12 years. But if we're going to play it dirty, we could just have another 2 to 3 months before heading into really big troubles, and we're not going to terminate the year that way. So you do it as you want, but we've got multiple ways to just go bearish in the end. It's just what the market will pick. That is the only variable to me. Okay, so trade safe. Once again, if you are playing around the Wall Street things and the dollar things, this is really a short-term game with lots of implications, and those who are trading this aggressively might head into troubles. Okay, the big short, and the area in which I think the dollar and both the equity are really pricing for a big short is whenever we'll get the dollar there below 100 on the DXY. And whenever we get there, this is where you want to make the big play. So for now, it's just speculating for a tiny pre-signal. As I said, and that was clear to me since the first damn day of 2018, I always thought that we'll make a doji candle. Meaning that we've been opening in there, we've been opening in there, okay? We've been opening the year there, and I always said we're going to close the year in here. And probably at least near those prices. So what I can expect right now is just the market to go down, breaking the support, and then pulling back there to terminate the year. And then next year, either we make the historical highs, and then we collapse, or we just collapse already because the economy is falling apart. Alright, so this is multiple options to go to the same things. It's just, I don't know what the market will pick. All I can see is that we have dangerous volume below resistances, and that generally doesn't suggest that we're going to create a bubble. I know that Wall Street will like to have its bubble, but it's not necessarily going to happen. Everyone thinks that's necessary, that's normal, because Apple's buying its damn shares and things like that. This is really a short-term gain, and this could be ended in just a single day. I mean, if we just make a minus 10% on Apple, they will not longer have the cash they need to make the share buybacks. We could have the damn move of Trump, giving them free money to lend back to US, and that will give us that will give them some pretty damn money. But once again, if we just flush out 15% of Apple, it's half of their cash that will be away. And believe me, they still need to have that cash. They're spending it into share buyback programs actually, because right now they don't have anything else to do with it. But if we cut down that money, believe me, this is the first sector in which the money will stop flowing in. And if the money is stopping to make share buybacks, who the hell is going to buy? Ask yourself that question. Who the hell is going to buy Apple at that price? Probably no one, and eventually even the sellers will start to jump in, and that will not probably be pretty afterwards. So, regarding the VIX, we've been pulling back the volatility, but we've been gapping up, and we've been holding that gap. So, okay, what we've done in here, gapping up, lower shadow candle, closing at the high, even closing with a new high. So, patience, but I think the VIX is heading to 21. So really don't buy what's been playing today. It's still too early. I really want to see how the US session will be playing today. Could very well be strongly bearish, or just tiny bullish. If it's tiny bullish, then we're probably going to have another down day on volatility, and that would be basically sign the end of that risk sector, and we're probably going to have to pull back once again. That's option number one. I really don't know. We're going to take the SPX. Okay, if you have a look at this, this is nothing close to bullish. Okay, this can just be a rangy sector, make bearish impulse, breaking down support, A, B, C, flat correction, retracing 50% of the bullish impulse, of the bearish impulse, which means that if that's what we're doing, okay, if this is what we're doing in here, then be aware that retracing just 50% of moves is nothing close to bullish. Is nothing close to this. Yes, it really is bearish, because if you're making wave 2 with just 50% retracement, you can expect a damn fucking impulsive wave 3 to come afterwards. So really it is that's option to me. Either today we just make the pullback in here, find the sellers, go to terminate the day right here, and if we do that, probably you can expect some damn bearish move tomorrow. There are some kind of tiny pullbacks once again, but this is what you can expect. Generally, wave 3 are even more impulsive than the wave 1, which means the trend we've been building in here might be even stronger in the next move. Consider the price will just accelerate, and this is what you can expect. And as I said, this is a damn fucking pile of stop losses we have on the SPX. And if we go to 21 in terms of volatility, means that we'll go there. Okay, this is where we've been making the latest support. So we'll go there, I think, in a straight line. And who the hell is going to buy in here? Could be bots. I really don't know. All I know is that in here I'm going to take tiny profits, but I'm going to let go, to expect some more bearishness, because I don't really think the market is going to buy that. I think the market is just going to rebuy in here. The sellers will just take a tiny bit of money, but we'll make like this. Probably going to make a wave 4, and then we're going to have the wave 5 just to lead us to the end. Going to take all the stop losses in here and then take nice fucking gains. It's just that the market would have fucked up with me during that entire time period to just do as I expected afterwards. So once again, playing and trading is a game of patience. Those who don't have that patience will forever be the losers in there. I do have that patience, even though it required to be proven false for damn 4 fucking months. I mean, the market just told me, no, you're wrong. No, you're wrong. No, you're wrong. No, you're wrong. Okay, you might be right. That's how it is. Okay? I don't necessarily fear that. Being proven wrong a few times in a row isn't a problem to me. All I care is just being right in the end. And if I'm wrong for a long time, then no problem, as I said. I totally accept that scenario in which I think the US will just try to make some higher highs whenever the Eurozone and Euro area will do some quite nice performance. But we don't have that big of an upward potential. Really, to me, an additional 5% in Wall Street is the maximum we could get, where I think the Euro area could eventually make 10%, 10 to 15% upward move. So if you think it that way, if you want to make it bullish, I think that the Euro area and Chinese, and especially Chinese, will have a damn bullish potential. But for example, the Euro area is probably about to make a 15% upward move to retrace to the historical highs and make new highs. So 15% potential on the Euro area, where the US only have 5%. So if you want to buy something, why the hell do you want to buy the Wall Street? Just get to buy Euro area. This is where you're going to make profits. Now, if we go to the downside, I think that the Euro area has an additional 5 to 7% downward pressure possible before heading into a long-term support that doesn't necessarily have reasons to fall apart right now, where Wall Street just have a 10 to 15% drop. So, in terms of bearish movement, Wall Street can lose 10 to 15%, when the Euro area can just leave 5 to 7%. So, once again, if you want to take the downside, why would you short the Eurozone? Simply because they're the weakest? This is how you think? No, when you're in ranges, you sell the highest prices, you buy the lowest prices. So you want to play the buying scenario, buy the Euro area instead of buying Wall Street. And if you want to play the downside, got to sell Wall Street, which is higher pricing, and you're going to get better returns. This is how you do trade ranges. I've been clear on that. I can be wrong, but I strongly think that the indices are in range mode and nothing close to trends. And this is where all those who play that like a trend will be proven wrong and will have to surrender stop losses. And I want to take those stop losses. Okay, and of course, if I'm wrong, this will be the trend scenario, but I'm still forecasting the price to be ranging. And as you can see, we've been fading to make higher highs, and we're already showing some signs of weaknesses. And I'm pretty damn confident to see. I'm pretty damn curious to see how we're going to play out today, and how the volatility will play the game. But if we go there, I really either you take a 20 or 15% profits in here, but no more than that. I really suggest that we're going to break down, and this is where I want to take the profits. This is where all the long-term stop losses are, and this is where I want to rebuy. Where everyone is going to be stopped out, this is the money I'm ready to take down. All right, so that's it. A scenario still ongoing. I'm still trying to figure out if I'm buying gold right now or not. The gold is working out perfectly on the area I was expecting yesterday, and we've been blocking in there. We'll see. I honestly, I don't know. The thing is that, as you can see, yesterday's candle is not beauty. It's been closing at the low, so it really is two options to me. Either today we make a bullish engulfing, or at least we get to close in here, and we get to close above the previous support, which is right here. So we get to close above 1,200 and $5, for example. If we go to close there, I'm okay to forecast that we've made the reversal, and in that case, I'll be buying. But buying right here might be a little bit too dangerous to me because we still have additional supports we could try to test, which are just $10 lower. So we could just make a lower shadow candle today and buying at lower prices. So right now, it's either I see bullish potential and bearish Wall Street this afternoon. In that case, I'm going to buy gold. Option number 2, we have Wall Street trying to get bullish, and they might eventually try to test that area with the gold, and this is an area I want to buy. So this is where I'm buying. And right here, I'd rather like to wait and have worst prices, but I want to have the price reaction first. All right. Regarding the US oil, UK oil things, I'm still aside from that. Don't really care about this one. But all the scenarios I've been putting at play is this. USD CNH, I'm still bearish. I'm still thinking that this thing is just playing with me, but not necessarily going to have to invalidate. So my stop loss is right here. I'm still patiently waiting at the current time, but I'm waiting for the support to break down in order to get to validation. So whenever we'll have a bearish engulfing pattern in here, clearly is the timing I will get into putting a damn more money in here. For now, still waiting. So I'm gonna change this. I'm gonna put it to validation. Alright, so whenever this alert triggers, I will be putting damn money into USD CNH. Sorry, not a big of a leverage. This one is a volatile one. It's a correction, so I will just go probably leverage 1 or leverage 2. That makes a potential to minus 5% to 5% gain on that scenario. And I will generally not put an additional leverage on there. So leverage 1 expected in here. Obviously right now I'm not leveraged on that position, which means I'll just get to a maximum leverage 1 on this and take a first profit in there. I'm probably going to have to play a second trade afterwards to target the number 2. Still waiting on AUDNZD. I've been taking gains on EURJPY yesterday right at the bottom, so perfect trade to me. I'm still waiting for the price to range a bit in here. So as I expected previously, as you've been showing this on the previous videos, I'm expecting the price to just range in there and make some kinds of sideways action. So we're doing it. We're having it. So now that this is it, I expect some rangy upside, downside price action, waiting to have that range build it up, and whenever it will terminate, I'll get to resell. But right now, it's just waiting. Okay, I have nothing close to a range structure, so which means in here it's just patiently waiting to see what the retracement looks like, and for now I don't see anything close to a bearish impulse. So it's basically waiting. Might be a first bullish impulse, might be a waiting for a triangle. I just need to have extended information at that point to be triggering a trade. All right. So the money I've been taking out, I've been taking 25% out of EURJPY. I've been taking a first 20% and additional 5% at the end of the day. So 25% out. And now GBPUSD, I've been buying with that money. So the money I took out from EURJPY has been put back into GBPUSD and Eurodollar. So I've been buying Eurodollar and buying GBPUSD. So I'm selling the dollar against Euro and GBP. For a short period of time. The time we get to retrace on the EURJPY, I think we could make some nice gain and see the dollar reversing. So I've been as well, this one I've been reversing it. So USD AMXN, you remember I've been buying this one. I've been taking partial profits in here, but actually yesterday I've made another analysis. And when I saw that we were failing right into 38.2% retracement, I said, oh, God damn it, I think we have something in here. So I have a new scenario in here. It has 2 options. I'm going to show you what those are. So this is, for example, I'm going to use the standard basic Fibonacci levels. Yes. So I've got 2 options. We got another level in here when I'm ready to take at the short side. Okay. So these are the 2 options I have. Okay. First one, we failed in here. All right, and this is already game over, and we're gonna go bearish, and the dollar collapses right now. Option number 2, the dollar isn't yet ready to collapse. It's gonna make another upward move. In that case, we're gonna make an ABC, and we're gonna go to 61% retracement, that resistance, and in that area, I want to take it fucking damn short. So it's either there or 76.4. We have a breakout level in between in here. So we'll see if the market has the strength depending on the depth of B wave. If B wave is in here, probably not going to get further than 61%. If B wave terminates in there for some reasons, we're going to have a C wave up here. So it's basically waiting, but I think right in here the USD MXN is going to be a bearish asset. Let me just show you why. I think if we go to the weekly chart, yes, if we go to the daily chart, you'll see it a little bit clearly. Okay, we're making a pretty damn nice bearish impulse in here. Clearly is a bearish one in weight. 1, 2, 3, 4, 5. So 5 bearish wave with an overlap, which means bearish impulse, which means this is a wave A at best, not say probably wave 1. So we've been retracing into waves A, B, C, which means we're bearish, which means we need to sell resistances instead of buying support in here. I'm probably going to have to break down that support. So the validation is in here whenever we break down that support. So this is where I'll get to leverage trading and not before. So this is validation. All right. So whenever we get there is the moment we'll get to put additional leverage in that trades. For now, patiently waiting to see if this is still consolidating to go higher pricings. But anyway, I'm selling in here just to set things straight with low leverage, and I'm keeping a lot of money to short in here, and I'm not doing any additional money until we then get to validate by breaking down that support. The target is in here as 100% extension of wave A. And we expect 5 bearish impulses. So first one probably already at play. I expect 2, 3, 4, 5. So if I have 5 wave counts dominating target 1, I will take entire profits in here. If I don't, I will extend to 127%, which is expected to be a little bit lower at 15 approximately. All right, so now moving on to the shares sectors. Tesla, things are not doing great anymore. We're kind of figuring out that the damn Musk has been bullshitting us with that damn fucking, how did he call that already? Funding secured. Actually, there is no funding secured. It was just bullshitting, and this could turn down on him if it turns out to be not pretty, and if Wall Street's trying to sell, it might be able to do it. Once again, it's a big damn range, so we need to have something to clearly break that resistance, and for now, we don't have it. We just see that it's been bullshitting us and playing the damn momentum, but we've got nothing to break the highs, and I don't think that we've got enough to hold that gap, as in a range, we generally don't make gaps. So let me be clear in there, I don't think this is nearly close to bullish. I think we're just damn fucking ranging, and that a gap at the middle part of a range is not a good sign. It's more likely something that we're going to erase and get to wrong foot. So we'll see about that, but to me Tesla remains bearish. I've been shorting right at the market top, so I'm basically waiting for now to see how it goes and how it plays out. Apple is really interesting right now. We've been failing to make a historical close yesterday with a big nice upper shadow candle. We'll see about that, but I'd like to see the market returning to some cycles. So I'd like to see the sine wave cycle go into the downside, and I would like to see the price reintegrating that trend line. And if this happens, we'll have a pretty damn good signals that we're retracing back to that range, to that gap. And I've been seeing this yesterday. It really is a damn dangerous. I mean, Apple has been gapping into a monthly basis 2 times. And this is not tiny gaps. This is really damn big gaps. And this is what we call a breakout gap. Clearly, we've been breaking up, making historical highs, holding the candle close, and putting up. Generally, we don't do twice that kind of gap in a single trend. So the fact that we've been gapping in here made me thinking that this is an exhaustion gap, which means generally the market tries to push, fail, and go fill that gap. And whenever the gap is filled, you know the trend is terminated and we get to retracements. But we're not talking about retracing of that wave, as this wave is the final wave. Okay, we're talking about retracing all that damn thing. And just to be clear, just a 23% retracement is below $130. Okay, all right. So do you really assess what that means? That means that, as I said, Apple is not going to be a leader to the next economic cycle. To me, not going to be a lagger in the end, but it's not going to be it's not going to be leading the scenario as it's been during this economic cycle. That's been leading by techs and leading by Apple. Apple is not going to be a leader anymore. I think it's going to lag at some point. but at least it's gonna damn fucking deep retrace, which means I expect a 61 to 76.4% retracement on Apple. So now if we just move this, just have a look at that. I mean, if we just do that and go there, I think there we have some interesting pricings, because we've got piling up of very, very interesting levels. So you have to know that level. If Apple is about to trigger a damn fucking bubble trading, note that $240. I think this is the next price I'm gonna have to short if we are about to make a bubble. If we don't make the bubble, we're gonna fail that. Right in here, it's just you take the breakout level, you take the lowest candle in here, you report that, take the lowest candle in here, you report the cycle to the upside and gives us a target in here, which is a Fibonacci extension level, whatever. So we might be just fading in there on Apple, but if we don't, we might go to the next level, which is right here. And as you can see, it will just give some value to the Fibonacci retracement. Look at this. If you go there, all the Fibonacci's are just really crazy, pointing to damn level. In here, 50%, the previous gap. 38.2, that support. 23.2, sorry, so 23.6 will be just right here, and will be the beginning of that bearish impulse. 61 will be right on that support, and 76.4 will be right in here. Okay, and as I said, I expect 76.4% retracement, which means losing I don't know how to say that in English. So yes, of course, 76.4%. And so we're gonna lose, like, imagine those who are buying the Apple right now. It might be worthing $60 at some point. So do you really want to buy it at the current prices, or just wait to have it better priced? I really damn wait to get that. So don't buy right now. Even if we were to go to $2,400, $240, then really, do you really want to risk this to get just this, as this is high risk and just needs to have a market in a bubble, which is not necessarily going to be the case, especially with that gap that is really worrying me, that we might just fail in here and get to the downside. So really, really, really trade it cautious. Don't do shit. Don't trade too aggressive. And if you do want to try to buy to go there, don't put a lot of stocks in here, because we might reverse in a single day. And as I said, we might just make another. If we were to go down, first supports are there, which means the first bearish signal will be a minus 21% drop, and could very well be done in a couple days. So really, you want to be in front of your computers each and every day if you're buying Apple. If you're not, if you're just trying to make the buy and hold thing and things like that, danger is down the road for you guys. All right. So now moving on to other shares. I'm still bearish on Nvidia. I think that one is really weak. We'll see about this one as well. I'm invalidating if we're reaching out to historical highs again, but we had a pretty damn nice bearish double signal in here. Okay, down. Red cross, red triangle after overbought pattern. We're squeezing, which means it's impossible to sell right now. It's impossible to get into very leveraged position, but anytime we go to test that support again, is going to be validation and going into additional trade entries to me. To get into first targets, probably just right in here. So target number 1 is out of context to me. Probably going to get straight to target number 2. Okay, so this is how it goes to me. Target number 1, maximum target will be set in there. And this is how I do play this. So probably expecting a 50% retracement on that asset. Boeing, still bearish on this one as well. This one is really damn dangerous. If we get to break down that support, same thing goes there. Validation, target with a fucking damn 25% drop. So as you can see, if this triggers, you know. Sorry, I'm gonna have to do it a little bit faster. It's 12 a.m., which means it's about time to go to heat. So the thing is that, remember, if we do this, all those values will trigger crash pattern, which means as the equities, and this is really important, we're going to terminate in here because this is where the trick actually is. And this is why I think Wall Street's about to trigger range mode instead of instead of the opposite. The thing is that I don't think Wall Street is a bubble, not in the SPX. So this is what I forecast us to do. Okay, so you really get the point in terms of cycles. This is not a crash. This is a market that is retracing with 2 bearish impulse, consolidating before buying again. Okay, and then you get the bullish outburst. Okay, now if you need to apply those cycles to other assets that are bubblish, like to me the Nasdaq is a damn fucking bubble, so the Nasdaq is not going to play it the same way. The Nasdaq will have to trigger a crash pattern because it's been overbought, it's been vertical, it's been crazy damn bullish, and we found the volume, we found the volatility with the volume, and now we are failing to have the volume below damn fucking resistance. So if we are failing in here, this is a crash pattern that will trigger. So crash pattern, you know how they trigger. First, fucking damn drop, then we make the dead cat bounce, then we get to first bearish impulse, and this is how it goes for the Nasdaq. Okay? Sorry. So this is how it plays for the Nasdaq, and this is where we'll get to return to the bullish cycle. But first we're going to flush this, but we're going to make 3 bearish lows, lower lows in a row with 3 market tops lower as well. Okay, this is how it goes. 5 bearish impulses on crashes, 2 bearish impulses on consolidations. So yes, we're going to break lower lows into the Nasdaq if we do it the way I think it will. This one is going to be pretty damn fast. So generally the dead cat bounce is a fast pattern, but the first drop is going to be violent. So where the SPX is simply going to retrace the supports, I think the Nasdaq will lose a lot, which means in here probably just 10% drop, where the Nasdaq will trigger a crash, which is generally at least 20%. And I think we can eventually make a 25, not necessarily going to go there, but I think in here, which means the Nasdaq components will just suffer a lot more than the SPX. So who do you want to sell? I want to sell the damn fucking gainers, those who think this is too big to jail, too big to fail, too big to whatever, okay? Anything that is too big is what is going to fail if I'm right. So these are the ones I've been selling. Damn Apple, damn all those assets who are pretty damn overpriced, but no one wants to sell because they are too big. This is how it goes. These are the ones I want to target. Obviously, I'll be the only one to get the gains in here because that's how it's always been. Every time everyone has been proving me wrong was every time I've been the only one to make the gain afterwards. So all the trend traders obviously won't see this coming. They won't. They won't take those gains. They will take and suffer heavy losses in here where I will take pretty damn gains. This is the only reason why I'm the only one to see this, because I'm a speculator, and only speculators does see and trade those patterns. Doesn't mean I'll be right, but if I'm right, I'm obviously going to be among the only ones to take the gains in there, because I'll be the only crazy ones ready to go against Tesla, against Apple, against Amazon, against things like that, where everyone will just wait and get there to sell. I will obviously get maximum leverage in here, but I'll probably be one of the only ones to take the gains out there. Okay? And this is what I forecast to happen on any big gainers on the who has been making bubbles. This is where, and I think in here, the trading scenario is this as well. Collapsing, dead cat bouncing, bearish, and terminating. And then afterwards bullish. Okay? The damn crashing pattern. Okay? We've got the crashing value, minus 20, minus 30%, brutal in a couple days. No one see it coming besides the trader, besides the speculators. Then we get the rapid rebounds. This is where everyone is knows that things will be dirty, so they're getting out as soon as they can. So this is the best case scenario. If things are okay, and if we still have buyers in there, we'll have the rebounds. The risk is for us not to have that rebounds. This is if things are still doing well in the economy. But if things go dirty, if for some reason Trump is trying to move shit and doing some stupid moves out there, we won't have this. So this is why I've been warning you guys. I will obviously take my profits if we go there. I'm not stupid. If I play this, I know I must not let that gains last long in the market. So basically play the damn short, taking the gains and waiting. But if for some reasons we have just a tiny pullback, those who've been buying in here will be just trapped there forever. So really play it smart. You're thinking that things will do as usual, and if we do it that way, this is what's about to come, and you'll have options to get out at pretty damn prices, at pretty good prices. We'll have opportunities to get out with not that big of a loss. And just as you've been doing in Bitcoin, this is the equivalent of 17,000. Whenever you were back then, remember what you were thinking. You were thinking this will go up forever, and you didn't want to go out. As back then, I was selling, and I was right. And then we got what? The crash. Now everyone see the market and value is crashing. Then we got hope phase and purge. Okay? So we will have the exact same thing happening in there. The purge will be right here to fuck up all the stop losses in here, and then we'll be done. Okay? But we can replicate this to every damn other asset in here. Netflix, already at play. We're already falling apart, and it's about to keep on going. Okay? NVIDIA, this one's about to collapse as well. First target is at least there, and we're probably going to have to go lower. It's minimum minus 20, minus 80, so minus 30. So as you can see, all the big gainers of the NASDAQ will probably take down 30% losses in a few days. And no one will see that coming. The trigger can be very violent, and it can be in a single day. We can take a minus 10% on all the giga caps, and the NASDAQ will just take a minus 10% in a single day, but obviously no one will see this coming, but me, because this is my job, and I don't say that this will obviously happen, just saying that if it happens, you can be sure I'm going to open my big mouth and say, what? I told you, fucking hell. So you've been criticizing for months, and you couldn't even possibly imagine how many critics I'm receiving lately, and this is just driving myself I'm so laughing at them, because if this happens, you can be sure I'll be out there to say, fucking hell, I told you. Just because I hate doing this, but when people are sending me so much hate messages like, Phil, stop selling the big caps, you're gonna be fucked up, you're gonna be whatever. If it turns out to be right, you can be damn sure I'll be saying it. So anyway, moving on from this, this is pure ego trading, but once again, I'm not putting emotions into my trading, but from time to time, I do like to play with emotions, and especially with the guys who are playing that game with me. I mean, this is how it is. I like to play games, and if you want to test me, then if you're wrong, then I like the guys who are criticizing me, but have some respect to then say you were right. But those I like to fuck up are the ones who doesn't even have that respect. They are just there to criticize those who speculate and say you are damn stupid to short that market. And whenever you're right, they're not even there to say, okay, you might have been right that time. Okay, this is how it goes. I mean, this is how you can difference the traders. I've been making a video letting you know who the commercial traders are, who the speculators are, who the trend followers are. Generally, we always have that same game between the trend traders and the speculators, and we are fighting right now. They're fighting me, saying, fuck it, Phil, the trend is bullish, just keep on playing and riding the trend. And I'm there to say to them, oh damn, we've been reaching out pretty dangerous areas and you shouldn't play the trend. You should really play cautious, and I'm going to take your stops. This is how it goes. They might be right, I might be right, the future will tell. So, taking the questions and moving on, because I have to go meet my friend to go eat outside. So not that many questions. Good. So thanks, Phil. It's the same for Ethereum scenario. What is the invalidation point of crashing market? I think I've answered that questions today. Okay. And of course, tomorrow we'll make the live room session regarding the time frames. This is something we haven't done last week, as I took the entire session for the French users. So of course, this week's no French versions, and we'll go straight forward into the US version. So we'll meet 1 hour earlier than the usual time scale. So we'll meet 5 p.m. EST time frame, which is 9 p.m. For those who are in Paris time frame. All right, so see you guys tomorrow evening for this. Of course, see you tomorrow for the scenarios following. So once again, don't be mad at me. I know I'm a gambler into that kind of scenario, but you can be sure I haven't been putting all my money in there. I'm still following I'm still doing my job, managing my risk, assessing risk-reward ratios, and trading out of this with a decent risk management. So this is what I'm doing right now. I think trading bearish is the most rational thing to do, but obviously the trend traders will be fighting against me, and the future will tell us who is right and who is wrong. But if you got my point and what I've been trying to teach you guys out there since I've been starting to do it, right and wrong is nothing we care about. Somebody's going to win, somebody's going to lose. All that's important is that if you're a loser, you're not going to lose that much. If you're a gainer, you're going to gain a lot more. This is how it must go. And just to set things straight in here, if I'm right, I'm going to take a damn fucking amount of money. If I'm wrong, I'm not going to lose that much. So you might know why I'm playing this and why I don't give a damn shit about what everyone is telling me to do or not to do. I just do what I have to do, which is playing my damn scenario, playing my damn trading, playing my damn patterns. It's just how it goes. I have a plan, I have a risk-reward ratio, I have a risk management. I do trade, highs close, and I have no problem with that. If I'm wrong, I'll be there to say I'm wrong. I'm not going to hide myself, and of course if I'm right, you can be damn sure I'm going to open my mouth this time.